Let's talk about the Road to Housing Act and what it could mean for mom and pop versus institutional investors. Welcome back, everyone. Today I want to spend about 10 minutes talking about something that's been getting quite a bit of attention in Washington and in the real estate investment community, the Road to Housing Act. If you invest in residential real estate, especially single-family rentals, this is something worth paying attention to. But as with most federal housing policy, the headline sounds simple, while the details are where things get complicated. So today I want to walk through four things. First, what the Road to Housing Act actually is. Second, how policymakers are thinking about institutional investors versus mom and pop investors. Third, a proposal floating around about institutional investors potentially having to sell homes within 7 years. And fourth, why the federal government trying to regulate single-family homes can get confusing when real estate is mostly governed at the local level. The Road to Housing Act, which stands for Reforming Oversight and Addressing the Demand for Housing, is a broad federal housing proposal aimed at increasing housing supply and improving affordability. Housing affordability has obviously become a major issue across the country. Rents have increased, home prices have increased, and policymakers are trying to figure out what forces are driving that. One group that has gotten a lot of attention lately is institutional investors buying single-family homes. And that's where this discussion starts to intersect with real estate investors. When people talk about institutional investors in housing, they usually mean large companies that own thousands of homes. Examples might include firms like Invitation Homes, American Homes for Rent, Blackstone-backed platforms, and large real estate private equity funds. These companies operate large portfolios of rental homes across multiple markets. But here's something important that often gets lost in the public discussion. Institutional investors actually own a relatively small share of the single-family housing stock in the United States. Depending on the data set you look at, estimates generally show that institutional investors own somewhere between 2% and 3% of all single-family homes in the country. But they're easy to make the bad guy when politicians are looking to point a finger at somebody. That means the majority of single-family rentals are still owned by small investors. In fact, roughly 70 to 75% of rental properties in the United States are owned by individuals or small partnerships, not large corporations. And most of those owners hold fewer than 10 units. So when policymakers talk about regulating institutional ownership, it's important to recognize that the vast majority of rental housing in America is still provided by mom and pop investors. This is where definitions start to matter. Different proposals floating around Washington define institutional ownership in different ways. One common threshold used in policy discussions is something like 350 or more single-family homes owned or controlled by a single entity. So you can see politicians are trying to get out in front of all the corporate structuring that could happen. LLCs owned by LLCs, and anything to get around minimum thresholds. So they're intentionally keeping it very broad. That's a very different type of owner than someone who owns one rental house, a duplex, or maybe 5 or 6 single-family rentals. Those smaller investors are typically individuals building long-term wealth and providing rental housing in their communities, while institutional investors are often large funds deploying billions of dollars of capital across many markets. Now here's another definition that sounds simple but actually isn't. What is a single-family home? Most people think of a detached house designed for one household. But in the real estate world, the definition can vary, depending on the municipality. A single-family home could include detached houses, townhomes, zero-lot line homes, and sometimes even duplex structures that are platted as separate units. And that's where federal legislation can run into complications, because while Congress may pass a law referring to single-family homes, the way properties are classified and regulated is typically determined by local zoning and platting laws. So what qualifies as a single-family home in one city may actually be classified differently in another. It's really difficult for Washington to give a sweeping definition across the whole country when it can be highly nuanced from municipality to municipality. One of the more controversial ideas that has been discussed alongside these policy proposals is the concept that institutional investors might eventually be required to sell single-family homes within a certain period of time. In some versions of the discussion, that timeline is 7 years. The reasoning behind this concept is fairly straightforward. Some policymakers are concerned that large institutional buyers entering the market could reduce housing inventory for first-time buyers, push prices higher in certain markets, or change the dynamics of homeownership. So one idea that has been floated is that if institutions acquire single-family homes, they may eventually need to sell them rather than hold them indefinitely as rental assets. Now, whether that specific provision actually becomes law remains very uncertain, but it has definitely sparked a lot of conversation in the real estate community. If a rule like that were implemented, it would change the way large investors approach the single-family rental business. Institutional investors typically buy homes with a long-term hold strategy. They rely on rental income, portfolio scale, and long-term appreciation. If they were forced to sell within a certain time frame, it could shift their strategy towards shorter hold periods, development instead of acquisition, or even exiting the single-family rental sector altogether. And if that happened, it could reduce some of the competition that institutional capital currently brings to certain housing markets. Interestingly, smaller investors might not be impacted much at all. If the legislation focuses specifically on large institutional portfolios, then the typical mom-and-pop investor who owns a handful of properties could remain completely unaffected. In fact, in some markets, it could actually create more acquisition opportunities. If institutional buyers pull back from purchasing single-family homes, that could mean less competition, more inventory available, and potentially better pricing for individual investors. Again, it all depends on how the legislation is written and how the definitions are structured, and realistically, how much gets added into the bill before it's finalized. The final thing worth mentioning here is that real estate markets are extremely local. Housing supply, zoning, and property classifications are mostly governed by cities, counties, and local planning commissions. So whenever the federal government tries to regulate a specific type of housing asset, there's always a challenge, because definitions and classifications can vary widely across jurisdictions. What one city calls a single-family home might be categorized differently somewhere else, and that could make enforcement of a nationwide policy much more complicated than it might initially sound. Defining single-family home on a national level is tricky, especially if an investor purchases a large build-to-rent community where homes could be separately platted with hundreds of different tax ID numbers, or even just one tax ID number. So if an owner is required to sell 7 years later, but there is only one tax ID number, it becomes incredibly complicated. And this is where we're likely to see legal challenges play out. At the end of the day, the Road to Housing Act is part of a broader conversation happening across the country about housing supply and affordability. But it's important to remember that institutional ownership still represents a relatively small portion of the overall housing market. Most rental housing in the United States is still provided by individual investors and small operators. And regardless of what happens with federal policy, the long-term fundamentals that drive real estate investment remain the same. Population growth, job growth, and housing supply, those forces ultimately determine where investment opportunities exist. We'll keep watching how the Road to Housing Act evolves as it moves through Congress, because depending on how the final language is written, it could influence institutional investment strategies, housing supply dynamics, and potentially acquisition opportunities for smaller investors. But for now, it's mostly a policy discussion worth understanding rather than reacting to immediately. Thanks for listening, and we'll see you next time.